Matt from Invector Trade, just looking at the markets a week ahead. Going to go through some of the general markets. We're looking at some of the indices, touch on silver, some of the metals, crypto as well. Have a look at Bitcoin, see what that's doing. So to start off with, I'm just looking at NASDAQ, starting the US. I think there's some interesting things happening over there. This is the same channel we've been watching from the March lows. So what you will see is obviously really clear channel. The blue line is a moving average 9. This is a daily time frame, and it's really respected this channel all the way through. We had this close up here on the looks like the 2nd of September, and obviously that was a reversal sign there at the top when you got a candle like that. It was a warning, closed out, no follow through, price sold down, came back up. And then it came back down through the channel. Price then made a recovery. We were looking at this area first. So on NASDAQ 12,240, and see what price would do when it came up there. Price came up, did that test, and then immediately got a big red candle showing the sellers have sold it back down. One of the concerns at that time, we had this big divergence. You'll see it on the Awesome Oscillator. We had divergence there, we had big divergence on the RSI. So that was a warning sign, followed by a big red candle, shows sellers in control. Pricing came down to the moving average 9, which has dropped below the channel. Price is currently above it, but I would say big caution. And as we go through the US markets, actually, we're going to have a look at why it might not be as bullish as some people are saying. At the moment, it's not necessarily bearish. It's a warning sign here because price is closed above the moving average 9. It's back in the channel, so there's a good potential. And if I just draw that there, you can see the price come back up there. So this level is absolutely crucial. It's really key. This 284, say 12,284 was that peak. Will it retrace and then sell? So we're really keeping an eye on it. This is clearly where there's been an issue. So what we want to see is a bullish momentum. Is price closing above that level on the daily. If I just drag the Awesome Oscillator up, you'll see we've got divergence. When I say divergence, we've got price made a higher high, Awesome Oscillator and the RSI both made lower highs. So that's a huge issue. We then obviously got the reaction. So now I would sit and wait. If we compare it to FANG, so the FANG stocks, so Facebook, Apple's, Amazon's, this world. Again, you will see we are still clearly in the channel. So we're on the rising channel there. Again, exactly the same thing happened. When we were up here, this is the same chart we posted before. We haven't changed it. You had a falling wedge, price came up. Was either a retrace of that move or going up to new highs. Then got the reaction down. So we were looking at this area support, which was where the market took off from. Price came up. Retested the highs as we expected and then sold. So you've got the red candle, which is obviously similar to NASDAQ. Price is still in the channel. So again, we're not... If you want to be bullish and you want to obviously buy low, I would say looking at this chart, you are in the middle. Okay, so you would want to wait for confirmation of price getting above, closing above, back test, and then go. So you'd want to be buying on the breakout and then the pullback. Or clearly... when you're buying, you want to buy low, so you want to retest, come back down here. But at the moment, the FANG is right in the middle, so you could argue that's 50-50. We don't want to trade 50-50. We want to look for setups at 85-90%. S&P, this is really interesting actually, because I'll just talk you through some of the theory on this. So you've got this trend line. I think a lot of people are. You'll see that on a lot of charts. People talking about this megaphone chart pattern. I'm not buying into that just yet. But we can see each time price comes up, you've got sellers. And again, up here, big sell, then made this attempt here. What's interesting about this price, just going to focus on the daily. We had, some people call that a symmetrical triangle. What I actually, and you can go do research, have a look at this, it's actually a wolf wave. And this is remarkable because we didn't before. We haven't actually traded this. We've been focusing on DAX and Wall Street. But with a wolf wave, you've got 3 touches one side to another. Once you've then got these points, you draw a line through 1 and 4, and it gives you the target for what you could argue that's 0.6. and it literally hit that perfect, and a big candle, big sell, big wick. What would I say about this? Analysing this, I'd say you got prices supported clearly on the daily by moving average 9. So you look for some bullish continuation on there. What I would say is some of the warning signs. Okay, if I just get rid of that line for now. Price at this point was 3674. Price at this point 3592. So this made a higher high compared to that. If we then look at the divergence warning sign, so RSI has made a lower high, got that big wick. It suggests of a potential reversal. So whilst it can look bullish and it seems bullish, again, I'm a bit nervous with everything going on in America at the moment. That is, from a technical perspective, not even thinking about that. It's just the target's been hit on the wolf wave. Like I say, 1 to 4 comes up, comes to 6. So that target's been made. We've got this big trend line up here. Again, if you want to be bullish on stocks, that's no problem at all. But when you've got a range of movement, the low is here. Smart money bought. Will smart money be selling at the top? Where are they looking for a pullback to then get long? Again, you could use simple Fibonacci to sort of guide you. Where do you want to be? Do you want to be at 50%? Do you want to be 61.8? Or all the way down here? Let's just see. I'll be very cautious because there's a potential Elliott wave count as well, which is a 1, 2, sub 3, sub 4, and then a 3 up here. Is this a 4? Is this coming up to the tops? We don't want to be top pickers. We don't want to be bottom pickers. We want to wait for confirmation. At the moment, the market is up. But when you look at the underlying indicators, it suggests a reversal is in it is June. So what I'd be looking to do is wait for that reversal. Don't worry about trying to catch the tops. You'll always get a wave 1 down, then you get a wave 2 up when the market's selling. So you wait for the wave 2, and then you can manage your risk against the wave 1 starting point. Next chart, daily. Again, you see exactly the same thing. So this trend line is making me nervous because when it's getting up there, you're getting a big sell there. Reaction comes back up. You've got a big red candle, and you've got the divergence. So again, strong warning signs. Dow Jones again. Last week we finally made a new all-time high. It's been lagging the others, but again, I'll just show you that was a previous all-time high. Again, if smart money's bought down here, price up here. You want to be long the market, fine, brilliant. But again, do you want to be buying high? Again, there's nothing stopping this market shooting up, but if stimulus doesn't happen, there's a perfect reason for them to sell the market as an excuse. We've got the warning signs again for Dow Jones. So I'm not encouraging you to go out and sell the market. I'm saying there's a likelihood of a reversal imminently. This is daily time frame, so each candlestick represents a day. So it doesn't mean that tomorrow the market's going to crash. It doesn't mean the market's going to crash at all. It just means that there's probably going to be a reversal coming down. So if you want to be long the market, I want to be long the market. I like to buy, but I will be looking at buying previous zones of interest, probably there. Which is substantially lower than where we are at the moment. Again, you had this area was support. You could see price bouncing, and again, if I look at that, it's 26k. We're now at nearly 30. With a divergence, do I want to be going long, swing trading long at the top? Probably not. VIX is really subdued. So again, how much lower can VIX go is really, really basic. This was clearly resistance before, selling off there. This has been support. So again, are we looking for a price to come? VIX would its volatility index would generally say, as a general rule, what people look, they use as a hedge. So if the market's likely to sell, they'll go long on the VIX. So it can be a good indicator to look at. So again, if you're expecting VIX to be finding support at the same time the markets are finding resistance, then what you could expect to see is at least VIX come, here. It's not tested the March highs. So you could be looking at that. Germany DAX. I'm going to show you two really interesting things. I'm going to go on a weekly. Just want you to see this. So again, at this point we had the price going higher, RSI coming down, and we got a big reaction from 13,500 to 11,500. It's not getting above this trend line yet, so I'll be very, very cautious. Awesome oscillator is going red to a negative. RSI, we've got, extend the trend line. Can it go high? DAX still hasn't made a new all-time high. There is a gap up here, but I think a lot of people seem to be looking at the gap. If I go to the actual cash market, let's have a look. Change it to daily. This candlestick here is a warning sign. Just keep an eye on this moving average 9. Price is the mean price for the last 9 days if we're on the daily time frame here. So these candlesticks are not bullish. What you want to see, we've got a gap down here, we've got a gap here. Scrolling back out, we've got gaps, down here as well. But in short term, if you want to be long DAX, because these candles are bullish, you see these big strong green candles, hugely bullish. But again, if you want to be long the market, you're going to wait for a pullback. Again, you can use simple Fibonacci to get in, use the gaps, use the moving average. But the moving average on daily 12,781. Price is 13,076 cash close on here. So again, do you really want to be, you want to buy, sure, but do you want to be buying at these levels with that candlestick chart pattern? Probably want to wait for some kind of pullback to get in, would be my advice on that, would kind of be my suggestion. Bitcoin, obviously we've been bullish on Bitcoin. This is a chart, we haven't changed it from the 9th of August. These were our options, so we took profit here. Always in, I still got some positions running, but took some decent profits off the table because obviously bought in down here, and that's a strategy to take the profit and leave some running. We said if it breaks above, it'll probably come up to test these levels, which is fine. It seems to be on track. I want to buy more Bitcoin, but I don't want to be buying again up here. I really want to wait for the pullback to at least here, possibly here. I'm not sure it'll go there, but if it does, then amazing, fantastic. We'll add more. Long-term price plan is seems to be a lot higher. Again, watch this divergence. Price has been going up. It's not really happened with RSI. RSI's got weaker. It's a bit of a flashing warning sign. So that's Bitcoin. Silver, daily time frame, that is, seems to add a huge move, definitely bullish. And again, price came up, seems to be consolidating in a triangle, symmetrical triangle arguably. And if that's a bull flag, then you would expect continuation. And to measure that, you would probably be looking at adding this and then dragging that and adding it from the lows there. So silver again, gold again, bullish gold. Go on to weekly for gold. So you can see again, we haven't changed this chart. Got some big moves. There's a really beautiful channel coming up on gold, and it's just flying. We've got, as you would expect, again, go back to daily on gold at the top. Price comes up, we had this triangle, broke out, comes back, but again, the trajectory for gold is up. It's in the up channel, clear up channel, loads of bullish continuation patterns throughout. So yeah, we've been buying silver and gold, more silver actually, but really because it's seems to have been percentage wise doing quite well compared to the others. Platinum as well, I know quite a few people are keen on platinum at the moment. We're just focusing on gold and silver. I'm just looking at 10-year treasury, just give everybody an idea where we are on here. So weekly time frame really is incredibly low. But again, will we start seeing that go? Are we going to see rotation from stocks back to here? Is that yield? They're going to try to trap people in there. Is it slightly safer? Let's see how that plays out. Immediate targets we've got. This was a key area actually before. You see on the weekly. Price is 1.43 to 1.6. Currently, you see on the screen 0.89. So again, will price come back up there? Be very interesting to see if it does, if it can do. Again, when I keep going on about divergence all the time, it works. Really surprised, we don't see many more people using that. But yeah, really nice chart for the 10-year treasury being clear, down channel, broke above and then smack sell back down. Just keep an eye on that, how that plays out. And finally, I will look at just oil. Oil's an interesting area. You can see it's been really badly beaten up. When it came so low, it's obviously had a nice decent rally. And again, this downtrend line is going to be key. We really want to see how it reacts. You know, if it can get up there, I'm sure it will over time, especially if lockdown eases. You know, long term, this is a weekly chart, so each candle's a weekly, so it doesn't mean it's anytime soon. But the trajectory obviously has come up. What we're looking for now is a question mark whether this is a rollover or whether it's a consolidation before it makes a next move up. Let me just put that onto daily, give you a bit more clue. It's the big move, I guess you say, was from April to, what day is that? June. From that time period, it's not really done a lot. Okay, it's been hugging, it's been consolidated, probably thinking, a lot of people probably waiting, suspecting smart money, no doubt got in here, at the lows. And it's really testing this now. So to give you an idea, I'll put the prices up there so you can see. 44.23, 33.42, so narrow range. This has big implications if you're looking at long-term shareholding on BP, Shell, all those sectors, those companies. This is what you want to be looking at as the overall price as well. We'll give you some clues as to how they're going to go and how they're getting on. I'll show you what sort of key area this is, and why. It's all that was huge support going back to January 15. You can see that was, each time it come up, apart from this dip there, each time it came above, it was support. So now it's got back up to that level. The old technical analysis, of course, is support becomes resistance. So we've got a really big interesting level there. Oil and then subsequently our share companies, if you're looking at long-term holds. It needs a break and hold above this level. So again, what you would want to see, don't chase and try and assume. You wait for some certainty. So you wait for breakout, hopefully it then comes back and then off it goes. Let's have a look at the moving average again. Prices above, but again, these each time it's clear to see here. Sell. Trying to get back up. This was a big pin bar, green candlestick there, reversal candlestick, got a big wick underneath, and you can see there. Keep an eye out for these when you've got these areas. Keep an eye out for the wicks, green candles after a sell. It's likely to give you a decent move. Got that move subsequently when you got it at the top, and you've got a wick, and then it's a red candle like this. You are looking for some continuation down. So you could say really for the oil, it's in a range bound market. So again, with range bound, the rules are sell high, buy low, and don't chase a breakout because sometimes you get these false moves. Wait for the price to come above or below, whichever way it breaks out, and then you do the test. So again, if the range breaks down, if the range comes down, don't chase the sell. Wait for the price to come back up, and then you enter there. And then come down. Okay, what often happens is it actually comes back in the box. Okay, and I would say if it broke down, there's another sub box within here we could draw. So then you would want this level there. Okay, and it just reduces your risk. It helps you to see clearly where price is likely to go, how it's going to behave. So that is it for the week ahead. Please obviously subscribe to our channel, share it, comment. Let us know if there's anything that you want some particular assistance on. The team that we're working with at the moment, the students, very, very proud of them, that they are doing very, very well. We are focusing on RSI and divergence, and this keeping it simple with trading is the best thing. There's so many indicators out there. People don't know where to start, which ones to look at. They also, the settings that these brokers and all the rest of them give you aren't necessarily the ones that are going to make it profitable. As an example, RSI 1730 and 14 as the input level. Start doing your own research, your own homework. Go back, look at it, and you'll find that there's a lot of information within that. Why you might want to change those levels. You might not be very profitable trading the RSI on those settings. So what we're doing, and the whole team are doing actually, is actually going back through, checking it, and adapting our strategies on different markets, different time frames, because they're all different. Once you've actually done that, it's mind-blowing because you'll realise how profitable one indicator can be. Don't need to look at anything, you don't need predictions. you manage your risk, you look for a good entry, and honestly, it's mind blowing. You've all got access to this information. Everybody watching the video can go and do it. You've all got the RSI, you've all got moving averages. You just need to put the homework in, study it, and then you'll be blown away, and you'll start going from, hopefully you're doing well. But if you are struggling and doing a few profitable trades, you'll probably get your trade success rate up to 85%, which is doable, but not on the indicators these brokers give you. So I encourage all of you, that's a free bit of insight there. Go and do your research, have a look at the price action, have a look at what the indicators are telling you, train your brain to not think, but to just follow what those indicators tell you at certain points. And I promise you, you will make money on that. 76% of traders lose money. And the reason they lose money is because they're all given the same tools and the same, indicators and the same information. And that's why 76% of traders, according to IG, lose money. So please, do your homework. Feel free to sign up. And yeah, hope this video helps you.